Thanks for joining us. In yesterday's show, we pointed out that there is a impending clash between Nvidia and Tesla relative to the S&P, and we wanted to review that today because I think there's important investing trading information in there you should be aware of. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, like better ideas on investing and trading, please join us on Patreon. Note my Culver hat, Culver Academy. So something is going on right now, which is on Friday of this week, so there's what's called triple witching, the third Friday of every month. And there are adjustments in a number of variables. And this is one of them that's significant, I believe. So let's look at a general concept called rebalancing. So we've gone through these cycles of investment process. So obviously we're in the old days before 1970, the banks were dealing with trust stuff only within the banks. Then we got brokerages where people were paying per share. Then we got a huge wave of folks like Fidelity that came in as mutual funds. And then the wave that we're in now, I would say we're half to three quarters of the way through, is the wave of what's called index funds. So basically, the biggest index fund out there is S&P. So there are actually formal S&P funds and informal S&P funds. So what happened is that at least half of all the money that's invested currently is index-based in the S&P. And so because of how successful that was, you had all these sort of tracking funds that were not officially S&P funds. What they started doing was like, okay, we'll do the technology portion of the S&P because the technology represents, perhaps half the value, maybe more, and the most volatile positively, et cetera. So I wanted to note this to you because there's a phenomenon going on, and that phenomenon is something called the rebalancing. So 4 times a year, we have something occurring where the S&P is what's called rebalanced. So the way to think about it is this. Let's say you have a group of stocks and sort of your position with the S&P depends on your market cap. So basically, if your market cap goes up, you get a larger weighting. If your market cap goes down, you get a smaller weighting within the S&P. So the reason why we were looking today at sort of the rebalancing and looking at sort of the clash of Nvidia and Tesla is, as you know, particularly since we got the earnings numbers, Tesla sort of dropped from around 250. And then after the latest sort of cut in prices, Tesla has sort of lurched towards the high 170s. Well, what that did was it cut a certain block of the market cap value of Tesla out, which means that they actually, on a percentage basis, actually would slide down in the amount of market cap they have, and therefore the S&P has to cut the allocation to that stock based on the declining market cap. So in this case, what's happened, and I think is significant, is that when we recommended you look at Nvidia, they were in the 400s, pulled back into the 300s. Now Nvidia is 800, almost 900 a share. So you could say it's tripled, but just for argument, let's say Nvidia has doubled. So that means its market cap has doubled. And now this creates a situation where all the people who set up the weightings for the S&P have to go back and determine how much to allocate to each company. So because of Nvidia's market cap going from under $1 trillion to $2 trillion, their market weighting with the S&P rises. So the next thing that happens is, Tesla has probably, if you look general numbers, it's lost at least 10% of value, maybe 12%. but more importantly, relative to the S&P, its market cap has declined, so therefore it has to be reduced in terms of its percentage of the S&P. So what I believe then is that there's a process where the weightings will come out, and a lot of people figure it out ahead of time so they can modify their portfolios accordingly. But I believe what's going to happen at the next reweighting, which I believe starts to happen with the triple witching this Friday, is there are all these funds that will have to redo what they're up to in order to fit the proper weightings within the S&P. So I believe what this means then is we probably see a 3 to 5% cut in the price of Tesla related to this. And I believe when it comes to Nvidia, because of its market weight increase, they probably see a at least 5, if not 20% increase in their weighting within the S&P. So what this does then is starts to have them moving with a stock price up nicely relative to this rebalancing that goes on with the S&P. So how fast will this occur? Well, the answer is, in theory, it could occur instantly. I really doubt that, and the reason is that this is a large event. There are large institutions who control this money. So what they're going to do is, you could say dollar cost averaging, but it isn't required this is instantly done. They do have time to do it. I expect that they'll try to slowly do so to reduce the potential spiking effect of either buying or selling large amounts of shares at the same time. So could it happen quickly with it starting as soon as we see the new balancing and everybody doing their thing? Yes, it could. But I really think what we end up with over the next 1 or 2 weeks, we end up with this sort of rebalancing occur. But I think it definitely is going to affect stock prices, and especially is going to affect Nvidia. So Nvidia is late 800s now. I would not be stunned to see it in the 1,000, 1,100 zone after the rebalancing. When it comes to Tesla, we're in the, let's say, 180 zone right now. I wouldn't be stunned to see, a 10 or 15 point move, probably down because of the rebalancing occur. So the other variable that's out there, we've discussed it numerous times, is there's a possibility that there's something called sort of PE bloat. So let's say the PE of the stock market kind of goes up and down depending on whether the market's up or down. And what can happen and does happen is the fact that when stocks are fairly expensive, and there's a problem that happens. There are huge numbers of pension funds and individuals that have cash to manage. So what they'll say to themselves is, well, I know that the real value of this company is X, but the market PE has risen by 20%. So we can pay 20% greater than X because of the general market PE being higher. So Tesla's PE may be at a certain number, but because of general inflation of price within the markets where things are pricier, there are a limited number of companies that fit certain parameters. For example, there's a concept called technology big cap growth. And so what that means is that if we look at a Walmart, for example, Walmart's revenue and profit grows by approximately 2% per year. So what that means is that the population is growing at 2%. So therefore, Walmart's stock price / revenue should grow at 2%. But they're pushing new initiatives to try to get greater profitability while revenue is rising more slowly. What I'm chasing here is the fact that there are certain growth rates that generate better stock prices. And those growth rates are related to how much faster your earnings are growing. So you have to manage carefully in order to get that done. And in this case, Tesla reducing pricing is why the stock price is down, and it's affecting the market cap, etc. So could there be new stuff that boosts the stock we didn't expect? Well, nobody's been saying what the throughput or the backlog is right now of the Cybertruck. But if we're getting decent throughput and we can see a forecast of there being decent numbers sold, that's one variable that could be a counterweight to the declining share of stuff that we've discussed. Um, so we're going to get hopefully some numbers from that. If the numbers are too low, Elon won't break it out separately. If the numbers are attractive, he will likely include them. So we'll see what ends up happening with this. But currently, we actually don't know the answer to that, but we're definitely looking forward to what occurs. At any rate, I just wanted to review this with you guys because the weighting issue is going to be there definitely. The one other entity that I think is, they haven't gotten crazy big yet, but I think in the next month they could come on the radar, is watching how the increase in prices of Bitcoin is affecting the Bitcoin miners as well as MSTR stock price. All of them doing great, expected to possibly double in the next 60 days. So I don't love it as an investment, but you can't argue with right now. Those guys are making a killing. At any rate, this is Greg for Teslafaninsight. Thanks once again for joining us. We actually look forward to your comments and input on this. I also want to thank, I noticed that we're getting a lot of viewers from the New York area. Obviously, those are investors that are part of it, and the other part of it are analysts that have to look around for new information with which to make decisions. We appreciate your joining us for viewing, and any comments you want to share that help the regular investors get a better command of what's going on would be greatly appreciated. So the final thing I wanted to review today is one of my favorite health reminders from one of our docs, and that is, prior to lovemaking, try and do no more than a salad. The reason is the blood flow to a very large meal reduces blood flow to all the rest of your extremities. And that blood flow issue will make it a very much less enjoyable experience. So I wanted to, again, thank you for joining us. This is Greg for Teslafaninsight. Just au revoir, ni hao konbanwa, arrivederci, namaste. And in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.